Hey everyone, welcome to another video on my channel, and today in this video I am going to share a stock which I expect can return up to 50 to 60% in the upcoming year. In this video I'll be sharing all the insights as to why I expect the growth to continue and how I am actually valuing this stock. Stick on till the end to know what exactly I am expecting out of this stock. And before we move on to the video, I would also like to talk about the sponsor for today's video. So the sponsor for today is none other than Delta Exchange. Delta Exchange is a crypto derivative trading platform. So in case if you are already an active options trader trading in Indian markets and you also want to try cryptos, right? So then Delta Exchange is one of the right place to actually start with your crypto journey. So unlike the platforms where you get to own crypto, in Delta, you don't actually own crypto, but you can trade derivatives of crypto. So you can buy Bitcoin future, you can trade Bitcoin options, but you cannot own a Bitcoin. If you're an active options trader who also wants to get some amount of crypto exposure, make sure you go to Delta Exchange today. You can also use the link in the description below to open a free account in Delta Exchange and start your crypto journey. With this, now let's quickly move on to the video. The stock which we are going to discuss today is none other than Dixon Technologies. So this has been the top performer for the last 2-3 years, but it has seen a significant correction in the last 3 months due to the market fall. But I expect this stock to go into the mode of consistency in delivering returns moving forward. And let me explain why. First, let's try to understand what does Dixon really do. Dixon broadly is into the business of manufacturing electronics and electricals. So let me just come to screener.in and let's take a quick look at what the company does. So if you take a look at it, they're mostly engaged in electronic manufacturing services, which includes customer electronics, lighting, home appliances, CCTVs, mobile phones, and much more. So they also do wearables, security surveillance, and also PCBs. So broadly, when you take any kind of electronics, whether be it assembly or manufacturing, it is actually done by Dixon. When you take a look at the business model for Dixon, there are two broader business models under which they operate. The first one is called as OEM, which is Original Equipment Manufacturer. So what this really means is Dixon is basically going to gather all the parts from different vendors and it is going to assemble the product for the brand. So let us assume there is a smartphone manufacturer who is a customer of Dixon. So instead of manufacturing every single component, so they are going to just gather all the components and assemble it for the phone brand. So similarly, the same thing goes for television, same thing goes for washing machine, lighting solutions, whatnot. So they're just going to take care of the assembly part of the product. The second business model is ODM, which is Original Design Manufacturing. In this particular case, what Dixon does is it manufactures and assembles the product. So it is not just assembling the third-party products, but it is also manufacturing and assembling the product. So broadly, these two are the segments under which Dixon operates. And when you take a look at the revenue split, so you can see that nearly 25% is coming from consumer electronics, 12% is coming from lighting products, 7% from home appliance, and the major part here is basically the mobile phone industry. So as and when we are seeing the growth in usage of mobile phones, you can see today this particular industry of mobile contributes close to around 60% of Dixon's revenue. So this is the business overview for the company, what exactly it does and how it operates. And since we know today nearly 60% of the revenue is coming from mobile phone manufacturing, we will just take a look at the client list for Dixon. So I have taken out this extract from Nomura Research, and you can see here, this is basically the list of smartphone brands and how many of them actually are clients of Dixon. So you can see almost all major smartphone brands, including Samsung, Xiaomi or Poco, Vivo, Realme, Oppo, all of them are actually the clients of Dixon. So Dixon is not manufacturing and assembling all their models, but they are doing few of their models, right? So you can see broadly, almost all the major brands that are available in India is associated with Dixon. So mostly the business comes from Vivo, Oppo. So that is the core business for Dixon, but they also manufacture for Samsung, Poco and other brands as well. So recently they tied up with Google Pixel. Google Pixel has given them the contract to manufacture or assemble Google Pixel smartphones. So this way, the only one particular brand which they haven't tapped into is Apple iPhones. So that is something which they're trying to get as a client. So once that comes in, the revenue might further end up increasing. So majority of the growth what we have seen in Dixon has actually come because of the smartphone. Now let's quickly take a look at how exactly the stock has performed and the reason for the stock going up so much. So if you take a look at from 2021, so around 2021, this particular stock was trading around 3,500 rupees, and today value of one share is around 15,000 rupees. There is almost a 5x growth in the last 5 years. So this particular increase or this particular growth was possible because of the quick growth in revenue what Dixon has showcased. So a stock for no reason is not going to surge 500% unless there is real growth in business. Now let's quickly come and take a look at their P&L, right? So if you take a look at this, from 2013 to 2020, they had increased their sales almost around 6 times. But what they have done post 2020 is something really amazing. So you can see that from 2020 to 21, there was almost a 50% growth. 21 to 22, again almost around 40-50% growth. Then the sales grew around 20%, then further around 30 to 40%. And you can see in the last year alone, so this financial year is not yet completed. So we have one more quarter before which this gets completed. And Dixon has already doubled their sales, nearly doubled their sales. And very likely they are going to cross even 40,000 crores by 2025 March. So you can see from 2020 or 21, the real growth has started for Dixon, where their sales have almost gone up by 8 times in hardly 5 years. So now when you take a look at their net profit, you can see something similar happening. So where the company was hardly reporting under 100 crore net profit, in the last 5 years, they have almost increased their net profit by 5 times, from around 120 crores to around 600 and odd crores. So I am considering this number to be 600 because here whatever we are seeing 252 crores, this is part of other income. So this is not going to come in regularly. So if we remove that, so we are going to have around 650 crores of net profit. So from hardly around 120 crores, they have increased it to 650 crores in 5 years. So because the profit has grown to such an extent, no wonder the stock has also gone up by 5 times. So now when we take a look at the balance sheet, so you can see that the balance sheet is very clean and clear. So they have very good reserves growing steadily, and the borrowings is also well within controls. Whereas if you take a look at it, they have huge amount of trade payables and receivables. So they have to receive close to around 7,700 crores and they have to pay around 11,000 crores to their vendors. Barring this, the fundamentals look decent. I wouldn't say excellent, right? So they are working on a lot of receivables, payables, and the cash they have is around 200 crores. But this shouldn't be any blocker towards the growth story that Dixon is yet to witness. So what growth story the Dixon is yet to witness is something which we are going to discuss. So when you take a look at the growth drivers for Dixon, so it is still going to come from the smartphone business itself. Today, maybe around 25 to 30% of the smartphones manufactured or assembled in India is done by Dixon, and they have a huge potential to increase the market share. So they have very strong existing clients. Now they're also starting a joint venture with Vivo to manufacture. So these existing clients can end up giving them more number of models to manufacture or assemble, and they can also get in new clients like Apple. So this is the primary growth driver for Dixon, which continues to be the mobile phone segment. Last year, that is 2023-24, this mobile phone segment actually grew by 200% for Dixon, 190 to be precise. And this is again expected to or continue to give very good growth in terms of Dixon's revenue. Along with that, they also have other categories like consumer electronics, lighting, and much more, which is also expected to grow at a decent rate of anywhere around 10 to 15% for Dixon. So with this, now they have also invested a further $3 billion towards manufacturing of semiconductors. So they want to set up a semiconductor plant, and they are investing close to around $3 billion just for that. So these are the growth drivers for Dixon. One is the existing market which they can widen, they can acquire new clients, and they're also getting into a new vertical of semiconductor. So these three happens to be the key drivers for Dixon. So now let's quickly take a look at what the brokerage reports have to say, or the broking houses have to say. And let's start with Mirae Asset Sharekhan. So you can see Mirae Asset has given them a buy rating. So this report was published in January with a target price of close to around 19,400, right? So whereas if you take a look at this is by Nuvama, so they have given a target of 18,790. And if you see Anand Rathi, they have given a target of 21,875. So if you take a look at the price of Dixon today, it is around 15,000. And all these prices, say be it 19,000, 21,000 or 18,700, comes up to at least around 25 to 30% higher from here. So how exactly are they coming up with these numbers? So what exactly I believe can be the valuation of Dixon? So let us try to understand that. First, let's try to take a look at their estimates, what these broking houses are really expecting or how they're expecting Dixon to perform. So let me just come down and open their estimates. So I'm also going to attach these detailed reports down in the description below so you can download and read it. So these are just 3 of the reports. So whatever report I can get hold of Dixon, so I'll be attaching all of that down in the description. So make sure you check it out yourself. So first, let's start with Anand Rathi. So Anand Rathi is expecting net sales of around 37,000 crores, 37.8 thousand crores for 25 financial year. That is end of March. They're expecting it to report around 38,000 crores. So end of 2026 March, they're expecting around 60,000 or 57,000 crore in revenue. And end of 2007 March, they are expecting around 75,000 crore in revenue. So you can see the current one is around 33,000 crore. So in the next 2 years, they are expecting this revenue to double. So similarly, when we see Mirae Asset, so they are expecting the revenue again to be around 37,500 crores for 25, 60,000 crores and 80,000 crores for 2027. So mostly the broking houses estimate is that this growth, what we have witnessed in Dixon, is going to continue because they are growing their sales nearly at 40% CAGR and even profits at nearly 40% CAGR. So they are expecting this to continue and the sales to double by end of 2027 and to grow to around 60,000, anywhere around 58,000 to 60,000 crores by end of 2026. So as of today, when you take a look at it, they have reported anywhere around 650 crore of net profit, leaving this other income, right? So we will see what exactly these broking houses are expecting. So they are expecting by end of 2026 March, so Dixon will report a net profit of around 1,150 crores and 1,650 crores by end of 2027. So that is further, the net profit is expected to more than double in the next 2 years. So when we come to Nuvama, again here we can take a look at the net profit. So reported profit is basically the net profit. So they are expecting 2026 to end with around 1,300 crores of net profit, which is basically to double from here. And they're expecting by March 2027, this company should be reporting around 1,700 crore of net profit. So similarly, if you take a look at Sharekhan or Mirae Asset, so even they have reported on a similar line where they're expecting around 1,400 crores net profit for the next year and 2,000 crore net profit for year 2027 March. So putting all this together, so we are mostly seeing there is a consensus that given all these growth drivers, so you can read much about what are the exact drivers these companies are actually planning out and much more in these reports, right? So you can further read as to what drivers these broking houses are considering further in these reports. But given that, so we can anywhere come to a consensus that by end of 2026, mostly the common estimate out of profit after tax is around 1,200 crores. So based on 3 reports, but even if you take multiple reports, so the estimate is that the company can report a PAT of nearly 1,200 crores. So now let's see what the valuation of the company is. So today this stock tends to trade around 144 PE. So it is being trading at this PE because the growth also has been of an equal magnitude. The company is growing really fast, and that's the reason the PE is really high. But going forward, the company might not sustain a similar kind of valuation, and it might or might not, but in case if it doesn't, there is going to be a valuation correction. If there is, then there is absolutely going to be no issue. So we will assume that the valuation is actually going to drop from 144 PE to maybe around 25% to 110 PE. So it can dip further or it can sustain at 140, or let's take a case where it is going to slowly contract towards 110 PE, because a lot of these sectors, so be it amber, be it PG electroplast. So most of the companies which are operating in this electronic manufacturing segment is actually trading around 100 PE. Even if you take a look at 5-year median PE, so that comes to around 120, and 10 years is around 105. So broadly, the median PE has been around 100. So let's assume the valuation is going to drop from 144 to 110. So let's quickly pull out a calculator, and here I am going to put 1200 into 110. So the valuation which the company can possibly trade, given that there is a correction in the valuation and the net profit is just around 1200 crores, is around 1,32,000 crores. So today the company is trading at 91,000 crores and the expected market cap is around 1,32,000 crores divided by 91,000 crores. So which is going to result in a 45% increase in a stock price. So now this is an ideal case what I'm thinking of. Now we can take a bullish case scenario. So a bullish case scenario where the net profit can be somewhere around 1,400 crores and the valuation can be somewhere around 130 PE, which will result into this particular stock actually returning double the returns in the upcoming year. So this is of no recommendation. I am just suggesting if the valuations can maintain and the profits can double to 1,400 crores, what the growth potential for the stock is. So let's also take a look at a bear case scenario where, assuming that instead of 1,200 crores, it only ends up reporting around 1,000 crores and the PE ratio falls from 144 to 80. So we have seen almost nearly a 50% drop in the PE ratio, and the overall growth is hardly around 15 to 20%. In this case, the company has to trade with a valuation of around 80,000 crores, and currently it is at 91,000 crores. So there might be a further fall. So like the stock can end up correcting. But you just see in terms of the risk to reward wise. So one is the PE should drop by 50% and the growth should only be up by 15% versus the PE dropping by 20%, whereas the growth continues as what is expected from most of the broking houses. The bull case scenario is where the PE continues to remain the same and also the growth outbeats or outpaces what the other broking houses are expecting. So these three are the scenarios. From the broader perspective, when you look at it, it does feel that the risk to reward what this particular stock is offering at this point is really, really good. So assuming that the stock can deliver a 50%, 45-50% return from here. So I am expecting this stock to trade anywhere around 22 to 23,000 by end of December. So this is my expectation out of the stock. I can be totally wrong with my analysis, and that's the reason I would suggest you not to follow it unless you do your own research or consult your financial advisor before acting upon the recommendation. So this is purely based on 3-4 factors. One, how I am expecting the company to grow and what valuation I am expecting these companies to have going ahead in the next 1 year. Here there can also be a lot of other challenges. So something like the company not growing as we expect, company losing its customer. So recently Tata is also coming out with a $10 billion investment in semiconductor who can become a competition to Dixon. There are many other factors which can actually come in between out of our expectation. So in such cases, there might arise a scenario where the stock will not grow as what we expect. But apart from that, if it is actually expected to deliver the same thing what most of the broking houses are expecting it to, so then we can for sure see this stock to deliver some very good returns. The reason why I am making this video today is because the stock has come down nearly 15 to 20% from its all-time high, and I feel at this point it offers really good risk to reward in case if somebody is looking to enter the stock. With this, we come to the end of this video. I hope you liked this video and you got to take home some valuable insights. If so, make sure you hit the like button, share this video and follow me for more. And also, don't forget to start your journey into trading crypto derivatives with Delta Exchnage.